Good morning, good afternoon, depending on what part of the country you're in. Thank you so much for taking an hour out of your day to join me and my teammate Karen on talking about some of the payroll tax liability reporting challenges that our Ajera users are faced with today. And I'm going to start us off just with a few housekeeping items. As we go through today's user group, we really have shortened the content today that we're going to be delivering to you, and we've reserved, nearly half an hour for just questions and answers. We are going to be providing feedback from all of you to Deltek as they consider enhancements for the time entry surrounding this. So please fill up our questions box. We won't monitor the chat box, but we will be monitoring the questions box. We will answer as many questions as we possibly can during this hour. If for some reason we don't get to your question, we'll definitely follow up with an email. At the conclusion of today's user group, you will receive a survey. We really ask that you take a moment to fill that out. It's really only a few questions. There is a handout in the handout section of your GoToWebinar pane, so you can retrieve that anytime. It will also be included with the email that you receive after today's user group, but it's out there as a PDF right now. If you're interested in receiving a CPE credit for today's user group, you must answer all 3 polling questions and complete the survey. The survey is where you indicate you need that. And I'll be reminding you during the polling questions because I don't want anybody to get frustrated if you don't answer all the polling questions and the survey. So just a little bit about SN real quick, because I think many of you know us and know about us, but for those of you that this might be your first user group, Stanbaugh is a very unique firm, over 100 years in business, 60 plus years with our primary focus on the AE space. We have specialists all throughout the firm, like Karen that you're going to meet in a few minutes. We all have specialties we focus on, but we come together to help the AE industry. I've listed a few topics here that might be of interest to you, but welcome you to just check out our website as well. So for those of you who may not attended a presentation that I've been a part of, my name is Val Higgins. I'm the Managing Director of Project Management and Ajera Consulting. I am also the Scottsdale office for Stanbaugh. Most of us or nearly all of us are remote employees today. I've been working in the A&E space my entire career. I have sat in your seat. I worked for an MEP firm here in Scottsdale for 13 years. For 10 of those years, I used the Ajera software. That's where I grew to love it. So I've got a lot of hands-on experience. You'll see that I'll share some practical tips throughout these user groups. And this is really just a passion point for me. So I'm so grateful to be here with you all today. And I'll let my teammate Karen introduce herself.
Yes, so wherever you're listening into, good morning or good afternoon. My name is Karen Poist, and I'm excited for the opportunity to speak with Val Higgins today. I am the Managing Director of the State and Local Tax Practice Area here at Stanbaugh, and I am representing Stanbaugh from Birmingham, Alabama today. So I've worked in the state and local tax area and in public accounting for my entire career, over 30 plus, as I see here mentioned on the screen. And again, as Val mentioned, this is a great passion of mine as well, and love to help folks and consult and advise on all things state and local tax.
Yay, thank you. All right, let's move on and review today's agenda. So Karen is going to take us through an overview of current changes in payroll tax liability. She and I have had several conversations, and I've attended longer webinars, and it is a complicated situation these days, but she's going to try and skinny that down and simplify it in a very short technical talk for us. And then I'm going to show you some known Ajera workarounds that clients that I have worked with are using to pull reporting out for the payroll tax liability reporting. And as I mentioned, we're going to have a lot of time for open QA and user forum, really hoping to provide a lot of feedback to Deltek. They understand that this is a challenge. This came up at their Insight conference in an open forum. So this is our opportunity to kind of talk about the challenges we face and provide some feedback. So I'm going to go ahead and launch our first polling question, which is, does your team ever travel to other states for work? And just a quick reminder, if you're going to request that CPE, I do need you to answer all 3 polling questions and complete the survey. And you all are coming in pretty quick here. I appreciate that. We've got almost 80% voting, so I'm just going to give this a few more seconds to make sure everyone has their opportunity to provide their response. And it looks like we've kind of slowed down here in the 80 percentile. So I'm going to go ahead and close this poll and share the results with all of you. So 84% of you, yes, 16% no. So we've got a great audience here, Karen, for you to really talk about this today. So I'm going to go ahead and move on to the next slide.
Yes, and thank you so much, Val. And this is what we're seeing now with companies being able to obtain clients nationwide, as we're having a lot of employees traveling into different states on either a regular basis for site overviews or any other type of work in these states. So that leads us into this whole issue regarding state payroll matters. Obviously, there's a lot of state tax implications when you do have someone going into another state. And basically what that does, it creates a connection for the company with that specific state. And there's three types of connections that can be made in a state, but today we're going to talk about the physical presence one, because that's where you're having an employee travel into a state and have a physical presence there. And what that does, it's going to create an onslaught of different tax consequences and tax exposures at this various state level. And as I mentioned, we're going to focus primarily on the payroll one today. So some of those exposures and consequences I've listed on the next slide. And as you can see, there is going to be a number of new state reporting, filing, and payment requirements. Because once you establish that connection by having your employee travel into a different state, it's going to trigger a lot of these things based on that state's rules. And the physical presence, not that that is the sole connection that can be made, but it's generally the most triggering, I think, connection and very most blatant trigger that it can occur and, implicate your company for additional state tax reporting requirements. And it's listed here. The states do incorporate a lot of different taxes, from income to business licensing at the local jurisdictional level, to sales and use taxes if you're subject to those. And then the main one here, again, we're going to talk about today is the payroll requirements. And so with that, let's lead into the next polling question, Val, in regards to, do you know what your responsibility is regarding payroll?
There we go. So again, a reminder, I know I sound like a broken record, but I really don't want anyone to be frustrated. If you are going to request the CPE credit, I need you to answer all 3 polling questions and complete the survey. You all are coming in very quickly. Appreciate that. We're almost at 90% voting, so I'm just going to give this a few more seconds. Make sure everyone has their opportunity to provide their answer. And it looks like we have slowed down with 90% of you responding. So I really appreciate your responding. And I'm going to go ahead and close and share. And I will let you speak to what you're seeing here.
Yeah, well, that's fascinating because it wasn't certain where this would really fall out, but that percentage at 58% is very good. Now, I guess the next question is how many folks are actually complying with that? Because as you know, getting into a state for payroll purposes is kind of a nuisance. But in regards to that, as Val had mentioned in the very beginning, she had mentioned something about changes for payroll requirements, and really it probably could be a change for a lot of you. But again, with the COVID pandemic, it really brought these rules to the forefront, and these rules have been in place for a long, long time. They just haven't been out there that people were focusing on and complying with. But again, with the pandemic and folks having remote employees, and with the ability for companies to travel nationwide to obtain client work and have projects in multiple states, it's really pushed it again right up in the front of everybody. And the states are looking at this now too. So with that last polling question, I am very impressed that there's a lot of folks that do know that you can just go to a state for one day, and that one day of work for that employee is going to be subject to that state's payroll withholding requirements. There's also some other states have different varying rules, and in a few minutes I'm going to show you, we're going to bring up a map of the United States that shows this, but there are also some things that you need to remember. Is one, this first day requirement. When we're going into these states, what are the requirements for this state? Is it a first day, or is there a specific threshold that we need to be looking at when we trigger the withholding requirement in that state? And it's very important to know what those requirements are, because we have had some client matters where the client was tagged on a Missouri issue, where Missouri came back and said that we understand you have payroll, you've been working in our state, but we've never received any withholding from your employees working in our state. And what we did is we assisted the client with filing payroll withholding taxes from the tax year of 2014 up through 2021, because the state does want that money. And so we're starting to see some notifications and information going out that on a variety of different states. So it is something that really needs to be looked at, paid attention to, and making sure that you comply the best you can, or making an effort to comply, and subject those traveling employees to a state withholdings where applicable. And so the biggest way to do this, and this is the whole premise of the webinar today and the user group meeting, is tracking employee work location. The question is, that's great, Karen, that you give us all these rules and you tell us what we have to do, but how do we track this? How do we know where our employees are working, or where they're going to need to be, and how am I going to know when I trigger these thresholds and when I hit that first day requirement? So Val, if you could go on to the next slide, we have the map representation of the United States and the varying states. Now, you can disregard the grayed out states, as those do not have a personal income tax liability requirement. So if you have an employee going into those states, because there is no individual income tax filing requirement, there's not going to be any type of income tax withholding requirement or liability. As you can see, the maroon colored states, those are the ones that have a first day threshold. So if you have an employee going into one of these states that is maroon, on the first day, your employee is subject to that state's withholding requirements. That means that if you come into my home state here of Alabama, that first day that you're here, those are deemed Alabama wages, and they're deemed for Alabama payroll withholding. Okay, that's the employer's responsibility, is to deem that employee's wages as Alabama and withhold accordingly for the state of Alabama. Now, on the employee side of this, they're going to probably have to file a non-resident employee, non-resident individual income tax return in the state of Alabama. So that's the other side of it. We can always look at the employer side, and then we can look at the employee side. But for employer purposes and for your responsibility as an employer is to understand how this works and what you need to be doing. The teal states listed here, or the aqua blue color here, these are the states that have a specific threshold amount. And I'm not going to go over them all, but if you see the, I think it's the next three accompanying slides, you will see we've identified each state's thresholds for your reference purposes. And as you can see here, all the states are very different. You can see Arizona 60 days in a current year, Connecticut 15, Idaho if you have wages of 1,000 or more. So you can see this can be very cumbersome when you're going into some of these other states. Right now, you can see the source of this information is from the Mobile Workforce Coalition, and there has been a lot of talk and information going around and bills introduced trying to get legislation on getting a conformity amongst all the states with, one underlying rule, how this is going to work. But as of now, nothing has passed. But again, bills have been introduced from, I think, all the way back to 2012 to 2021. So with that, Val, I think that's all I had for everyone. I'm not certain if you had any questions or if there was anything else you'd like to speak upon.
Yeah. Andrew has asked a question. That's why I flipped back to the slide here, Karen, because I thought you might refer back to this, but I guess his question involves this slide and the next one. But Andrew was asking, are these requirements just for employees that are working in a state long-term, either remote or set up as a field office, or does it also include an employee doing field work for 3 to 4 days? And I think that's what you were talking about here with this map, right?
Yes, and that's the thing, Andrew. When you have an employee that just travels into a state, they don't reside there, they're not permanently working there, but once they go into that state, based on the 1-day rule or that state's threshold rules, that triggers that payroll withholding requirement and subjects that employee's wages to that state's wages. So say your employee field office is in Texas, they're going to an on-site job location in Colorado for maybe 3 or 4 days. As soon as that employee steps foot in Colorado, okay, and begins working, those are deemed Colorado wages on the first day and are subject to payroll withholdings. Okay. Now, when you have a remote employee, those rules are a little bit different because definitely when you have a remote employee, say again, your field office is in Texas and your employee, say, works in Alabama, okay, remote employee from Alabama. Well, since your remote employee is located in the state of Alabama, that employee is working in Alabama, so all of his wages are subject to Alabama, okay? Wherever you're working is generally the state of where your wages are earned, okay? And that's a reporting requirement. Now, there are different rules in regards to reciprocity states and convenience of employer rules, but we're not gonna get into that. So technically, if you just have an employee that just travels occasionally into a state, depending on that state's rules for withholding requirements, the 1 day or a threshold is going to trigger your reporting requirement. A remote employee is generally resides in the state, is continually working there for a period of time or long term, and generally their wages are going to be subject to that state's rules and withholding rules. So hopefully I've answered that question for you, Andrew.
Thank you, Karen. And I was trying to type up and summarize as best I could and respond to everyone. So Susan has asked a question. Karen, so her question is, so the employee has to file a tax return in all of the states that he worked in and had withholding taken out?
Potentially, yes, they do. Yes, they do, Susan. And what's really interesting about this is my son, I'll give you this as a prime example. He resides in the state of Illinois, and he was on travel to California. He came home to Alabama, was out skiing in Colorado and Utah, and but also working, and that was during the pandemic. And so he said, "Hey, Mom, can you get my tax return prepared this year?" And I was like, "Oh, certainly." Nonetheless, I never realized I was going to be filing an Illinois resident return, a non-resident Alabama, a non-resident Colorado, a non-resident Utah, and a non-resident California, because his employer was able to track where he was working from, where he met the thresholds, and he was issued W-2s for all those state wages. In California, Utah, Colorado, and Alabama, he had withholding for all of those states, and I did have to file non-resident individual returns in those states. So answer to your question is yes.
Thank you, Karen. We have another question from Dee Dee. And the question is, what happens if your corporate office is in one state and you are visiting one of your locations? Would I have to pay state taxes on that employee? So I'm assuming this means that the company has multiple offices in multiple states?
Technically, yes. Your place of residence or your office headquarters in the state that you're generally working from is generally where you're going to be getting your state wages. If you travel to another office location in another state and work, then depending on that state's rules, whether it's a 1-day rule or if it's a threshold rule, then you would be subject to that state's requirements. So again, as you mentioned, you work, say, in a corporate location in one state. You say you travel to Georgia to visit your other corporate office and work, but you're only there 3 days. Well, Georgia's threshold is more than 3 days. I think it might be 23 days. I can't recall. And so you did not exceed that. So those would not be deemed Georgia wages, and they would not be subject to Georgia withholding. So you can see when you do have those thresholds, you can be very strategic of when you're in a state or when you're not in a state, how long you should be in a state and how long you shouldn't be in a state before you trigger something. Now, the 1-day rules are a little bit different because they're going to try to capture you on the first day.
Okay, I'm trying to capture all that here. And we have another question from Lisa. What about being paid to attend a training in another state?
Yes, and that's another one. We see people traveling to different states all the time for either trainings, webinars, seminars. I can tell you this from my own personal experience when I would travel from Alabama into another state, that was not done. Now, technically, is that correct? Probably not, depending again on that state's rules. So like if I'm going from Alabama and I'm in California, you know, did I trigger the threshold? If I did, then yes, and I'm working there, I'm charging my time to my employer and I'm getting paid, then that would be California wages. Now, Was that done? Probably not. But technically, is it incorrect? Yes, it is. So again, we can only give you the technical correct activity that you should do. So again, going from one state into another state where you are working and charging your time or coding your time or being paid for your time, that's going to trigger, okay, am I here too long, or are these wages really subject to withholding? And again, this one rule is really bites a lot of people. And I've spoken to a couple of revenue commissioners about this, because I've always told them they'd probably get more compliance if they push that 1-day rule out to maybe 14 days. But I can tell you what, a lot of, not to say this is right, because it really isn't, but generally an employer is not going to set up payroll in the state of Montana if they have an employee traveling there for 1 day and they never go back ever again the rest of the year. The cost of compliance or to set up that payroll is extremely expensive. And they may just say, well, fine, I understand I have that risk, I have that exposure, and if they want to come back and get me, then I'll pay it. So going through and registering yourself in all these states for payroll can be a huge, huge cost to the company. And that's why I say, when you look at these things, you definitely want to be very strategic about them. So if you accept the job in Colorado, understand that they have a 1-day threshold. And the minute that we send our people into Colorado, whether it's one employee or we're going to have 10 going throughout the year, that we probably need to just go ahead and register in Colorado, because we've got 10 people going there. We're going to exceed the threshold on the first day that these people step foot in. And that's going to be more reasonable and logical. So yes, the answer is yes.
Thank you, Karen. This is such a, to me, complex topic, but for me, the graphic, when I saw the state map and then the threshold slide, it really kind of started helping all of this gel for me. Oh, we've had another question come in for you, Karen. Manina said, you mentioned that your son's employer was able to track his labor hours to the different states he worked in. I know Ajera doesn't currently have this function. How else would we track this, or is Ajera working on this? Manina, that's the next part of the presentation. I'm going to be showing you some workarounds that I know some people are using, and our hopes are to get some feedback from some of you. I'm guessing maybe some of you are trying some workarounds, and we would like to provide feedback to get this over to Deltek as an enhancement request. It was a big topic of conversation at their Insight conference, and they are open to your ideas and your feedback. So currently there is no native way to do that in the software, but I'm going to show you some kind of workarounds. Chris Lewis says, it looks like all conferences like Deltek Insight or AUA should all take place in Texas, Florida, or a couple of other places with no state taxes. So he's right, Karen, right? People can be strategic with this.
That's exactly correct. And that was a great observation. Very, very good.
Yeah, I love that. Chris always has the great ideas here. All right, when I'll keep my eye out for questions, Karen, because I'm guessing we're gonna have some more as we continue to go through the presentation. So there was several pages of those thresholds that Karen has provided for all of you as a guide. And this is a very short presentation. We wanted to be able to focus on Ajera, so obviously you can always reach out to Karen with questions. All right, so I'm going to go ahead and launch our final polling question, which is, have you struggled with worked in state payroll tax reporting in Ajera? I certainly have worked with several clients who have. Karen and I together worked with one. And so I'm aware of the challenges. I am going to show you some workarounds. Well, I'm kind of struggling with them a little bit too. So it'd be super nice if we could see this built into the timesheet. So 70% of you have cast your poll response. I'm going to give this a few more seconds. And my final reminder, if you're going to request the CPE, please respond to all 3 of the polling questions and complete the survey at the end. And Chris had another great idea. There is a conference coming up for the Ajera Users Association in Fort Worth in April, and that would not be a payroll tax liability. So if you all haven't registered yet, I would encourage you to go to the AUA website and look at that event. It's going to be packed with great content. I'm getting the opportunity to teach a few classes, super excited about that. Stanbon is the platinum sponsor for that event this year. So it's always a great time to meet your peers and share ideas and hear from some Ajera champions. So thanks for reminding me about that, Chris. I really appreciate it. All right, I'm going to go ahead and close and share the results of our poll. So the majority of the answers, 43% of you said yes, 30% said no. So you may be just preparing yourself for this webinar for future state challenges or people working in different states. And 26% of you don't know. And I always include that I don't know because I realize there could be people attending these user groups and other webinars that maybe aren't sitting in an accounting seat. So these are things you can take back to your group and talk about and use our PDF. So I'm going to go ahead and hide those results. And let's talk about Ajera workarounds for a moment. So I just want to be completely transparent always with this group. And if you've attended our classes or user groups, I tend to shy away from workarounds because they tend to have impacts on other things that may not be intended. But hey, we live in the real world, and sometimes we got to figure out a way to get the information we need. The way that I'm going to show you today that we've helped a couple of clients with would not hurt your data in any other way. So I want to make that really, really clear. So currently there is no way to enter your state or city location when you're entering time outside of putting it in your notes. The challenge with relying on notes for something as important as payroll tax liability, you know, people could misspell states or cities, they could include part of the information, not the other. So we've tried to find a little more robust solution that doesn't require, you know, or rely on those notes. Now that said, they could still enter their notes. That would still be great. So some Ajera users today are creating separate phases on their projects for work that they know will be provided outside of that home state. So they're just setting up a different phase. And I'm going to show you this in just a minute in the software. Some are creating a separate labor activity to track that time. That's also a very easy and clean way to track that time. So if you have a very simple labor activity set up, I know a lot of people, when they first set up their data, they're kind of coached to use one labor activity called billable time. However, I've worked with many clients, and when I sat in your seats and I was using Ajera, we had a much more robust labor activity list. We wanted to see, you know, the time that people were spending on background setups and site observations and site observation reports and design and client meetings. And we wanted to see BIM modeling because we triggered a different rate with that. So we had a more robust list of labor activities. So if after I show you this demo, you think maybe using a separate labor activity would be the way to go, I just encourage you to think about, the complexity of your existing list, because you don't want to create two of everything. So we're going to maybe lose some detail when people use this special activity, and then we'd really want to encourage the notes. So just some considerations for you to think about. Either of these approaches require setting up custom fields for state and city or location reporting. Now, many of you may have already done this because I don't know if some of you might have attended a user group we had a couple years back, but if we're tracking city and state, super easy for us to export that data and create a pin drop map for our website, or just to see trending on our project data. Where are we getting the most work? So it's pretty common for us to meet people, Ajera users that already have those fields in place. So if you do, you can use your existing, all right? Depending on your approach, either the option 2 or option 3 that I'm going to show, you are going to need to track at the project or the phase level, and likely for the very best, most dependable data, we're going to want to enter that the state and city at the phase level. It's kind of a pain, but you only have to do it the first time you set up the project. The reports I'm going to show you are very simple. So if we wanted to track the home state for the project at the project level and only tag some phases with another state, we can do that, but it would require formulas to pull in that home state from the project level. So I've taken a simplistic approach, but you could get more complicated. It just depends on your widget and, SQL, SQL acumen. All right. So enough of that. Let's get into the data, and I've set up a little bit of sample data for us to look at together. And then I do want to, just hopefully have some open forum at the end. So for those of you who have figured out a workflow for this, I would love to have your input, please, because I will be sending this off. So if you've come up with a better approach than I have, please share away, right? Or if there are challenges with trying to do what I'm about to show you, please, any information you can provide would be really, really appreciated. So I'm guessing most of you know how to set up custom fields. So I'm not going to spend a lot of time here, but I do want to show you how we can add custom fields. So here you can see I have my project location state, and we chose to build a drop-down list. I always encourage this. If you leave your state open text, people can make mistakes, right, when they're typing, writing things, and we can get bad data. So I cannot create a drop-down list for usually county or city, maybe county, definitely not city. Every state has so many cities, but we can have a lot of control over our state data, which is great. So if you work in all 50 states, set up a list that has all 50 states. It'll only take you 10 minutes, super fast. Or if you only work in a few states, keep your list short. Just do what's best for you. So you can see that we've got our state list here. And then our project location local, we're using for the city here. And on this one, you can see I did use a memo field because, again, how could I possibly create, a drop-down list with all the cities? I did create a county one for someone in California. There was quite a few counties, but they needed it. We needed good data, so we did it. So you'll want to have your custom fields set up first. If you don't already have those, go ahead and set those up. And then in our project command center, I'm going to show you a couple different, the two approaches I mentioned. So if we look at our School of Hard Knocks project, this is where, if we wanted to, we would set up a separate phase for our on-site work. Now, I do want to go just a teeny bit deeper on that, because a client that Karen and I were both working with took a little more complex approach at that, and it was really based on need. So she had a phase set up like this, and she actually had to add child phases for home state and on-site. So she had to double the number of her phases. So I want you to really think about how complex or simple we can keep this. If we can keep it simple, it's always better. So I did a simple approach, but I realize that you might have a more complex approach required. So this on-site work phase, if we look at our School of Hard Knocks and we look at our custom fields, it's located in Scottsdale, Arizona, and our main contract is in Scottsdale, Arizona, but we know when we go on site, we get to go to the beach. So you can see how I've got separate or different information here at the phase level. So that's the phase approach. Now I want to show you, do I see this? Yep. So this is a project where I entered some time using the activity approach. So if we look here, we're going to see really very similar information. So New York, Circusville, New York is where my project is. My main contract's in Manhattan, but I got to go to Alabama for site visits. So my site visit phase still has to be tagged with this separate state. Even though I'm going to use an activity, I got to know where the location is for reporting. All right, I'm not seeing any questions coming in, so I'm going to go ahead and show you a few examples of some reports. And keep in mind, I have kept this very simple, and I'm in sample data, so I don't have a ton of data. But you can see I'm calling these state and local tax. So these are actually reports that I had developed at Karen's request, and we can install these in databases for, and this is more for our cash receipts to record the money we're making. So I just kind of modified them for payroll. So let's look first at the kind of reporting we would get with the phase. So I have this all collapsed here, but let me just do some expanding. And I'm trying to figure out if it's just quicker to go this way. I should have done this before. And then we'll do this. Okie dokie. So you can see here now how we have our on-site out of state. And it would be very easy for us to filter any labor report. You'd of course want to probably pull this by payroll date ranges. You could filter the whole report to only pick up our on-site out of state work. This is pulling in my actual employee cost here, and it's telling me the state and the city. So this time entry was controlled by the on-site, out-of-state labor activity. That's the approach where we're going to use a labor activity. Same, almost exact report where we're going to, oh, actually I did this one by phase. I did that all backwards, y'all. Sorry. So let's show, I think it's my School of Hard Knocks. Yeah, so I'm just looking at my School of Hard Knocks project. And you can see here that even though this activity was a client meeting, it's still showing up in California because we have that phase of the project, the on-site work phase, is showing that portion of the work for the School of Hard Knocks. We have 2.5 or 4.5 hours for Arizona and 11 for California. Okay. If you name all of your phases the same, you could filter by that. We would get the same kind of filtering down to our detail. So it's totally up to you, whether you want to filter and drill down to your special out of state work. I kind of like taking the approach where I'm going to include all of my data for the pay period, but see it parsed out by the state. That way I can confirm my total hours to my payroll processing and make sure that nothing has gotten missed. Because remember, all of this requires the data to be put in accurately, right? The data that we get out is only as good as the data that we get in. And you'll notice I save these under quick reports. I'm guessing all of you are very engaged with your Ajera because you're at a user group to learn more. So you probably have a lot of dashboards and widgets. I don't know if you have that, but I know I do. So if I have reports that like I'm only going to use once a year, like my R&D tax credit data extraction, or these reports that I might only need to use quarterly, I like to save them under quick reports. It's the same tool, it's dashboards and widgets. It just doesn't clutter up my home screen. So just something for you all to think about. And this is our approach by activity. So I could just filter here and quickly get to all of my on-site work. And you all know you can group or expand, this is all user preference, whether you like things all grouped up or you like things spread out, and then you can group them as you need to. But based on using the on-site work, we're able to capture the time that was worked not in the home state, and this is by using our labor activity that's on-site out of state. So even though this phase is not labeled on-site, it's labeled site visits, we are still going to pick up work that was done out of state. So this labor activity approach, we're still going to have the on-site location somewhere on that project, right? So that we can be able to report by the state and the location. I mean, I really actually think I'm more of a fan of the phase approach, but I do realize that if every one of your phases on your projects potentially could be out of state work too, it does double up the amount of phases. So that's when we might want to consider using the labor activity instead. Karen, after seeing the reports, is there anything you would add that we would need to be mindful of?
No, I think where you are right now, I think this encompasses everything. I think the only thing that you need to be aware of is that, as you mentioned, Valerie, is if they are working in a city jurisdiction where there could be subject to occupational taxes or occupational withholding on any of those wages that are earned in those local jurisdictions. So just trying to be aware of making sure that if I am in a city jurisdiction, that does occupational tax apply.
Yeah, so it's probably a good idea. I mean, if some of you are going to implement these things, I always recommend people do city and state because it just seems like at some time you want both, right? And keep in mind, we can do a lot of really great stuff with that data too. We can export it and create those really cool pin drop maps for our website to show people where we're working. And those are really fun. You can color code them by project type and all of that. So, you know, having your city and state on your projects using custom fields, not the location box, I think it provides value in many areas, you know, aside from this one as well. I'm not seeing any activity in the questions box. So I'm just curious, you know, we had 43% of you say yes, you have struggled with trying to get this data out. And I would just really welcome and appreciate it if, you know, you could throw in your comments, like what have you done? What are you trying? Maybe what did you try that didn't work? Uh, this is a really great opportunity for us to be able to provide information, you know, back to Deltec and ask for maybe some enhancements to help us with this. Because certainly, Karen, tell me if I'm wrong, the states aren't going to roll this backwards. It's only going to continue to roll out more, right?
Yes, exactly. I mean, like I mentioned in the beginning, these rules have been in place on these payroll withholding requirements, these state withholdings for a long, long time. And it's only been recently that they've been pushed to the forefront and made much more visible. And when the states are looking for any type of non-compliance area, which obviously it's probably been a big factor of non-compliance, they're definitely going to be going after those taxes as quickly as they can. And they know folks are traveling. They know folks are going into other states now more so than ever. So it is going to be a big topic of the states in regards to collecting revenue.
Yeah, and now we're starting to get some action. Thank you, everybody. Um, So let's see, I lost my place here. Give me one quick second. So Lori said, how do you fix / go back and calculate the pay withholding for local taxes? Lori, it really depends on whether you're processing your payroll in-house for just the software piece, for the reporting piece, and then I'll let Karen maybe speak to, like, you know, filing piece. But if you're talking about adjusting it in Ajera, if you're processing in-house, it would be a manual change. It seems like more and more people are processing their Ajera payrolls with outsourced providers, which actually makes this a whole lot easier, because if we create these reports, your outsourced payroll provider should be able to keep track of the worked in state for you, right? So at the end of the year, all of those W-2s and things are on them and not on you. I hope I answered your question, Lori. Karen, anything to add to that as far as?
Yeah, and what we've seen, if you've been doing the wages in a specific state and done the regular payroll state withholding, and then realize that, oh no, say I'm in Kentucky, I was supposed to do City of Louisville. You know, we've been working on that project in the City of Louisville, and we forgot to do their local withholding taxes, occupational taxes. What do we do? We've helped a number of different clients go back and rectify that. As long as you have that data and information, there are some remedies to pull that back into compliance. Generally, it would be at the expense of the company, not the employee, unless you want to go back to the employee and take it out of his current wages and remit. But generally, there are some remedies that that you may be available to the company in rectifying those kind of situations on the local front.
So Karen, with that, I just want to make sure I'm kind of capturing this. So we can remedy the situation, and does that mean we would basically be filing some kind of amended or late returns?
Yeah, what we do, there's something called a voluntary disclosure agreement. And generally it's when you realize, a company may realize that, oh no, we should have been doing this and we just realized we haven't. And a word of caution on that, that's a great remedy, but it's only good as long as you don't call the state, you don't just register, and you don't just go file. If we do the voluntary disclosure agreement, it generally limits your look back period. So say, oh no, we've been in the city of Louisville for all these years and we've never done this and we've never been caught, we've been doing it for 6 years. Well, the voluntary disclosure agreement will limit that look back period generally to 3 or 4 years. That generally waives all penalties. We would have to comply and come forward, and generally those are anonymously. We can come forward anonymously, they can accept it, they're going to ask for those payroll returns, those local withholding returns, the tax, and we're good and we can comply going forward. So again, if you find yourself in that situation, the first thing is to contact your CPA or us or whomever is doing your accounting function and see if you can get that remedied, especially if you're going to go back into that jurisdiction or if you have a continuing project there and you want to get into compliance. So yeah, I mean, we've done that with a number of clients. And the best thing is to, if you do find out first, then yes, before the state discovers you, then yes, we can use that remedy. Sometimes you may be discovered by the state and that remedy comes off the table and you're just going to have to do what the state's requiring you to do. As in my Missouri example, where we had to go all the way back to 2014 and go forward until 2021. They usually will go back at least 7 years. That's the minimum we've seen is 7 years.
Okay, so I was just trying to answer a question here. So we are not going to get through all of these questions. I've been trying, but I promise you, Karen and I will look at this QA report after this session and send out emails. And what we'll probably do is just send the whole spreadsheet to all of you. That's how it comes to us in a spreadsheet format, so that you could all benefit from the answers that we weren't able to provide during this time. So I want to really thank you all again for attending today. Karen, can you just confirm for me that you can see my Ajera or my PowerPoint screen again?
I totally can. Yes, I can.
All right. So just a quick review. Time entry review is critical when utilizing a workaround for reporting. So if we're utilizing some kind of workaround, we really want to scrutinize each week's time entry. Let's train our team. If we're going to set up one of these workarounds, either on the phase or the labor activity, yeah, and I would require notes for time entry on projects. And we did have someone say we're using notes and it's not working. So we wouldn't want to rely on the notes, but having them as additional confirmation and information, very helpful, along with the phase or the activity. So consistency and review are definitely going to be your best friends. We thank you so much for spending this time with us. If you have a success story, an idea, something innovative, if you would like to co-present with us in future months, we would love to have that. We had a couple people last year, so if you aren't shy and you'd like to come up, we would love to share the presentation time with you. Please complete the survey and let us know if there's topics you would like for us to cover. We have some good ideas for upcoming months, but we want your ideas. And just, appreciate you taking the time to complete the survey. Let us know how we're doing. Give us your ideas. And if you haven't yet, consider joining our virtual Ajera user community on LinkedIn. We try to have some conversation out there and hope to see you all start conversing out there as well. So thank you so much for attending. Karen, thank you so much for co-presenting with me. This was really great.
Yes, and thank you, Val. I greatly enjoyed it. And please, everyone, if you have any questions, reach out and we'll be more than happy to assist you.
All right. We hope you have a great rest of your day and a great rest of the week. Thank you so much. Bye-bye.
Thank you all.